For 2 years, the stock market has been largely able to ignore the lived reality of Americans during the pandemic, the mounting coronavirus cases, the loss of lives and livelihoods, the lockdowns, because of underlying policies that kept it buoyant.
And now to the economy back here at home and another record week on Wall Street. The Dow Jones closing today at another record high at 34,200, and the S&P 500 also hit another record mark, the fourth straight week of gain.
You know, we've had a record number of companies raise their own earnings guidance for this quarter.
You know, generally when the market reaches a new high, it goes on to reach another new high.
Investors can now say goodbye to all that.
Stocks tanking today with the tech trade really taking on the chin. Take a look at the NASDAQ 100. Only a handful of names posting gains in today's broad-based sell-off. Check out what happened in the Treasury market. Bonds getting battered, yield rocketing higher. The 10-year soaring above 1.7. All this as we learned exactly what went down behind closed doors at December's Fed meeting.
Come 2022, the Federal Reserve is expected to raise interest rates to fight inflation, and government programs meant to stimulate the economy during the pandemic will have ended. Those policy changes will cause investors, businesses, and consumers to behave differently, and their actions will eventually take some air out of the stock market, according to analysts. It's been a rough start of the year for Wall Street, and it keeps getting worse. Concerns about surging inflation are keeping investors on edge, sending stocks sharply lower. The Federal Reserve has projected it will raise interest rates 3 times this year, which could raise borrowing costs across the economy, including for mortgages and car loans. But investors fear the Fed will need to be even more aggressive given how stubborn inflation has been. Consumer prices surged 7% in December, the biggest annual increase since 1982. Many analysts now believe the Federal Reserve will start raising interest rates in March, and that the central bank may need to raise them 4 times this year. As a result, bond markets have sold off and stocks have tumbled since the start of the year, with the NASDAQ down nearly 7% so far in 2022. Here is a list of some of the biggest companies that have been hit hard as of the recording of this video. Zoom is down 55%, HubSpot is down 31%, BioNTech is down 38%, Broadcom down 10%, just to name a few. Now, you might be wondering, well, where do I put my money in 2022 once the interest rates start going up? Well, you can always look at sectors like financials, for example. The financial sector has historically been among the most sensitive to changes in interest rates, with profit margins that actually expand as rates climb. Entities like banks, insurance companies, brokerage firms, and money managers generally benefit from higher interest rates. Now, on the bank side, you have companies like Bank of America. You also have JP Morgan, Goldman Sachs, also companies like Citigroup, which does business in more than 160 countries. Now, on the broker side, you have companies like E-Trade Financial, Charles Schwab, and even Robinhood might do well in this sort of scenario. Now, if we look at insurance companies, you can look at Allstate Corp, AmTrust Financial, and the Travelers companies. Now, if you want to look beyond just financials, you can also diversify your portfolio by looking into consumer discretionary stocks. They can also see a bump because of improving employment coupled with healthier housing markets, because this makes consumers more likely to splurge on purchases outside of the realm of consumer staples, foods, beverages, hygiene goods. Now guys, this has happened before, so the whole point of this video is not to put fear in your heart, but just to kind of give you an advance notice on what will come, and you can see it happening now. Now, this sort of thing has happened in the past. When interest rates go up, tech stocks don't do so well. But you can also look at it this way. This is the best time for you to buy tech stocks because they are trading at a very good discount. So you can look at it as, let me move my money into the safer side of things, or You can also say, let me buy these stocks that are trading at a great price right now because eventually tech will go up. That has always been the rule, and that has always been the case. Now guys, that is it for this video. If you did enjoy it, please hit the like button. Also, if you are brand new, please subscribe, and I will see you on the next one. Take care.